All right, traders, I'm back again with another video, and today we're going to take time and talk about Ichimoku, oversold and overbought territories, and excess supply, demand, all that. How Ichimoku can show you these things just as well as any other indicator such as RSI, stochastics, MACD, and we're going to put it up to the test and we're going to compare them again. We're going to compare Ichimoku against those. And I'm going to show you that you don't need any other indicator on your chart. Just look at this Ichimoku system. It will show you the oversold, overbought territories, if that's what you want to call it. It'll tell you when the market's in excess supply, excess demand. It'll tell you when the market is in disequilibrium. So you don't need anything else on your chart but the Ichimoku system. So if you have the Ichimoku system and RSI or stochastics or something else on your chart, you're just really wasting your time. You're looking at the same thing that you could look at and eliminate having that on your chart and give you less things to consider. Everyone thinks that the more things you have on your chart to consider, the better. Well, that just gives you more reasons not to get into a trade or more reasons to be confused. Okay, so just having this on my chart, I have four rules that I really have to look for, and make sure price is in the above or below the cloud and just trade in the direction that it's supposed to be going. It's very simple to follow these rules. So I got in on a trade that I barely enter on, and this is going to be what we're looking here as the CAD yen, and this is the 4 hour time frame. When I took the trade, I was looking at the daily time frame, but no, actually I was looking at the 4 hour time frame. Yes, let me see what the daily was here, because I've been looking at the daily quite often. All right, so we were looking at the 4 hour time frame when we took this trade, and looking at the 4 hour time frame, we had a TK crossover right there, and that's where I got in. As soon as that candle closed with that TK crossover, I got in the trade. And I got into the trade because there was no risk on this trade whatsoever. This is a trade that I barely take because a lot of times it's far away from the Kijinsen when you have to take this crossover trade, and then it pulls back, so you're sitting in trades for a while. Well, I took this one because look how close it is to the Kijinsen. It was only like 15 pips away from the Kijinsen, which allowed me to move my stop loss even further down to 30 pips. I had this stop loss at. So you could see I was even well below this fractal level that was developed afterwards. This fractal level was not there at the time. I had my stop at this level here. You could see this support level here. So price came back closer to that support level but made a fractal here and then took off. So the first day of the trade, the first little while, couple hours, the trade didn't do much, then it dropped down, and then I figured all these TK crossovers, well, then the trade came back, and you could see when I looked at this, we had the crossover above the cloud. It's a very strong signal, and that's another reason why I took it, because it was a TK crossover above the cloud, which is a very strong signal. So I took that signal, and then I also saw that um, automatically price was above the cloud, so that was one thing. And then we had a future that was bright, so our future was bright. It already had crossed right here a long time ago, so we were already bright. And we also had Chiku span above price, so here we were with Chiku span back here when this happened in this area. So we knew that Chiku span was above price, and there was nothing hindering Chiku span. You can see Chiku span just running, and so is price. Now we've come up to this resistance here. We've hit this resistance level that I've drawn in off of the based off of the candlesticks here. So we're at a resistance level looking like a double top level here. So price may bounce here and drop down. Now a lot of times the rules are that you take the Ichimoku trade and you let it run until price comes back and crosses on the other side of the Kijinsen, or you get a bearish or bullish TK crossover depending on which way you were trading. And those are the rules that you get out on, or maybe a fractal loss, I mean a fractal crossover. But it all depends, because there's other ways that you can get out of the market, but those are the three main ways that I get out of the market. Now price is up here banging off of this resistance level. I want to see what happens at this level, and being that it's Thursday, I don't love holding trades, especially when it's up against a support and resistance level near the end of the week. So if this trade was around here and it was the end of the week, I'd probably let it go because it has a lot of potential. The potential here is going to die out because near the end of the week, if it doesn't break this resistance level, I don't expect it to break it Friday. But if it starts to fall today, we'll see how far it falls. I may get out of this one. We have 57 pips profit right now. So we'll just wait on this one and see what it does, and then we'll get into talking about some other things. All right, so let's go to the pound yen. That's a pair that we've been talking about in our forum here, and I'll tell you a little bit about the forum and what people have been saying here. So let's go to the pound yen and check that out. All right, traders. So looking at the pound yen on the daily time frame, this looks really bearish to me. I have a bearish future here, so my future is dark. I got a crossover that's bullish here, so a TK crossover that's bullish, bearish here. Chiku span is getting rejected right here a little bit off of the top of this cloud. So we're still bearish, but Chiku span is below price, well below price, and of course price is below the cloud. Now you have to come to the forum, guys, and register as a member. This is free, so we have a lot of things going on in the forum, and it just started, the forum did, and we have over 100 members in what I think it was 2 days. So we're getting pretty packed up in there. And the thing about it, we were talking about this trade. This is the pound yen uh, daily time frame, and I had a member telling me that they didn't believe that this would go short when I was saying that it was going to go shorter. I thought it would drop because of the resistance level of the cloud here, and I thought that level would be rejected. Plus, I see this candle here that's developing as a nice, indecision candle here. But they were showing me, and what they said, well, they thought because looking at the 4-hour time frame, that price was going to go higher, because look at price is very bullish on the 4-hour time frame. You have bullish crossover, bullish future here, bullish TK crossover here. Price Chico spans inside of price. Well, I mean inside the cloud, but above price. But the thing that you see is this rejection of this level right here of this cloud. So price may bounce off of here and then fall down, and then yeah, maybe eventually take off. I think it's going to drop a little bit before it takes off. So going back to the daily time frame, we're looking at that on the daily time frame. So I'm expecting price maybe to drop to this level, maybe back down to this level, somewhere in here. And then if it does get to this level, then we have a strong possibility that it could go farther. But we'll see what happens here. But you have to join the forum, because basically we were having fun talking about this one. And in order to join the forum, you have to come on to my website. So let's go there. I'll show you how to get to the forum. So fxatonglance.com, come there and you can see the tabs up top, what we have going on here, and this is some of what's happening here. So you click on Chaos Trader 63 forum, and it'll take you right to the forum. So here's the forum, and then I have things that we're talking about here. Now this is where we post a lot of the trade analysis that we're looking at. So it's under Ichimoku Trades and Analysis. But introduce yourself, let us know who you are. Okay, and so looking at that, I went in here and I made where are we? What's on the radar? That's what I posted. So I had a few trades that I was looking at. So here they are. I posted these trades just yesterday, last night, matter of fact. And then I posted this one here, but some people didn't agree with me on that one. So I had some rejection right there. So we'll have to see what happens there. But anyway, yeah, a lot of people in here are saying some things that are very good, and seeing things that really are good to help them to understand the system a lot better. So it's not just about me doing this, it's about you guys getting involved and being in this, because really it's not for me, it's for you guys. I enjoy doing it, I have fun, so in that manner it is for me. But here we are back to the chart. Looking at the chart, I think it's pretty bearish right now. On the 4-hour time frame, it's mixed signals, but you can see the rejection. Look at this level. What is this level? This is a strong rejection level right here, and you can see it on the daily time frame. And if you go to the 4-hour time frame, that level's there also, because that level's the top of this cloud right here, and that's a rejection level. You can see the resistance and support here. It's support, then it came to be resistance here, and this is the third attack at that level. When it hit it here, it dropped pretty far. Hit it here, it dropped far. Now it hit it here, so let's see how far it's going to drop again. You didn't have as much strength when you came the previous two times as you do right here, because you could see how Tenkan-sen and Kijun-sen were back then. They weren't as vertically inclined as it is here. So you see they're pointing straight up almost. So that's a lot of momentum. So there's some momentum to break this to the upside, at which point we'll just break this level and then price will continue higher, and then all my analysis on the daily time frame will be shot and I will be wrong and that trade will not work. Okay, but yeah, I'm going to be wrong sometimes. So I want to try to be, if I can be 50%, I'm happy, because it's the way that I use my stop loss which is going to make me profit. If I lose 25 and gain 50, and then I'm ahead of the game. Okay, so that's the way I look at it. So let's move on here. This is pound yen, so come check it out. Come to the forum, you'll be able to check out these trades we're looking at. So we're going to move on, look at what we were talking about before earlier, how the Ichimoku system can show you these oversold, overbought levels, and show you how the market's in disequilibrium, excess supply, excess demand, whatever you want to call it. All right, so we'll get right into it right now. All right, so we're going to start off with the Aussie New Zealand dollar. We'll look at excess supply, excess demand, or oversold, overbought, whatever levels you want to call it. Okay, but it's basically the market is in disequilibrium. Okay, because when the market's in equilibrium, it's going to be closer to this blue line, which is the Kijun-sen. Here, the market is in disequilibrium all this time, and it wants to pull back to equilibrium, which is the Kijun-sen. It does, and it pulls slightly away from it, comes back. Now it's hanging near that level, and then it stays near that level, and then it takes off. And then the market again is in disequilibrium, or else you might want to call it overbought. Okay, so the market's in overbought, excess supply. So we'll look at other indicators and see how they match up with this, and we'll do it on different charts. Okay, so let's add the RSI, and we'll look at that first. All right, so let's look at where Ichimoku is showing us, and we'll just see it lines right up. We're far away from the Kijun-sen right here. We're farther away, and that's where this is showing that we're in oversold, overbought territory right here. You can see at the bottom right here, it hits right on that level, and look how far price goes away from the Kijun-sen here. So we know that we're in an oversold, overbought level based off of looking at how far away price is from the Kijun-sen. The Kijun-sen is going to be your equilibrium line. It's going to be where the market is in equilibrium. Up here, the market's in disequilibrium. Showing the same thing on your indicator. It's showing you it's all the way up to this higher level, which means it's overbought. The market's in disequilibrium. Let's go to here. You can see how far we get away from the Kijun-sen. Well, it's all the way up here on the RSI, also showing us we're in disequilibrium, overbought level. So why do I need this on my chart? I don't need it on my chart because Ichimoku has shown me this already. Look at this. Overbought, disequilibrium, excess supply. We're already showing that on the Ichimoku system based off of being farther away from this Kijun-sen. And this Kijun-sen is going to be your main indicator for showing you levels of disequilibrium, if the market's in equilibrium or disequilibrium. So we get up here, look how high away, how far away from Kijun-sen we are, and look what the indicator is doing. It's above this overbought level, above the 70 level. And then you could see price stays farther away. Now look at as price tries to get closer to the Kijun-sen. Look where price meets, boom, at the equilibrium level, 50% right there. Same thing with your indicator. So why do I need this when I can see it happening right there? All right, so we go back here, and it's the same thing. The same thing. All right. So this is showing you that Ichimoku can show you these things. You don't need the other indicators on your chart. A lot of people put them on their chart, but they really don't need it because Ichimoku is showing you all of this. If you take the time to learn and see that, look where we are right here, all the way down here, and look where we're bouncing off the 30 level. So maybe people can't see these levels and figure, well, if it bounces off of this level, well, actually, you can stay in an oversold or overbought level for quite some time. So this really doesn't help you a lot. It does let you know that you're at that level, but it doesn't tell you you're going to turn around at that level. So it can stay at that level for quite a while. So having this on your chart just shows you what you already see here. If you learn to adjust your eyes to it and learn how this works, you'll know and see that all along. Same thing, I can tell you where I see it, and it's here. You could see these levels, okay, and you can see how far below the oversold level we became right here. And then you just have to look for ways to get back into the market. So the market's moving downwards. We're not going to buy the market really. We don't want to be counter trend trading, so we'll look for different opportunities. All right, so that's looking at it on the on that pair. Let's remove that line. Let's remove the RSI and let's put something else in there, like the stochastics. It's the exact same thing. Now this stochastics is all over the place, but anyway, look where it reaches these levels. The exact same thing as the RSI. Basically, you can see it's way up at this overbought level here, and look where the price is based off of the Kijinsen. So RSI is showing you the same thing as the Ichimoku system, and so is this stochastic, showing you exact same thing. You could see this on the chart, and you could see there now price. Now you get a pullback here. You can see it pulling back, and then when it hits the 50 level, let's see where this is marked on here. So it'll be midway between the two dotted lines up top. So let's see where we are here, and then price comes, boom, midway between the two dotted lines. So equilibrium, that's equilibrium. If the market's between oversold and overbought, you're in equilibrium. Between excess supply, excess demand, equilibrium. And equilibrium is important to know because here you go again. Same thing. Same thing. There it is again. So you can see this without having the indicator on your chart. Okay, and it's important to know about equilibrium, market equilibrium, because if you don't have an excess supply, an excess uh, buyers or sellers, and they're pretty much equal, then eventually somebody's going to take the lead. So eventually, when you get to equilibrium, the market is eventually going to go to disequilibrium. It'll be either excess supply or excess demand, and that's where you want to look for your trades. So that's where it becomes important to you. And also, you're not, you know, buying at a excess supply area or selling at excess demand area. So that's another thing. So let's remove that, and we'll remove this stochastics, and we'll add MACD. Let's see how MACD stands up there. Shows us. Everybody loves MACD. So let's see what that does. And it's pretty much the same thing. So we have the same exact thing. We'll make this a little bigger so we could see. We could go back here. This would be the overbought level. You can see MACD. Then we get a little pullback, and then MACD is going way above the level here. It's going way above. Now MACD is starting to drop, and the market's still going up, and we could see it on Ichimoku system. We're still going up. You still have your Kijinsen pointing up. It flattened out right here, but it started pointing up here. Now actually this is a little bit of divergence, because this is pointing up and this is the market's coming down. So that's where you got that divergence there, and then you could see the market started to fall, and there it goes falling. And now we're a little bit farther away from the Kijinsen. We're calling this oversold down here. MACD's down there, and now it's trying to stay near equilibrium. as the market bounces around, and then it takes off. We go up higher, and you can see what the MACD is doing. So it's the same thing. You can see these levels. Look where the MACD is in excess, way down here, excess demand or oversold way down here. Now MACD starting to come up on this. I have this set at, this one's set at 12. This is the normal settings, 12, 26, and 9. So that's the default settings on the MACD. But you could see this going down. So I usually would go MACD 5, 34, and 5. That's what I usually would do if I was using a MACD based off of Bill Williams' MACD settings that he uses. But you could see here, you have the same exact thing, price dropping. MACD starting to come up, price is still going down, so MACD is a little early here. You get a crossover, and then we're in equilibrium. Okay, so it's telling you the exact same things that the Ichimoku system's telling you. So let's go to another chart to just see if I'm just crazy. Let's see if I'm just crazy or making stuff up or what. We can see this on all the charts. I'll put these levels in right now. There we are. We're pretty far away there. We're pretty far away here. We're far away there. We're getting away from it there. So these levels will show you. So let's put the indicators in now. Let's start off with the RSI again. So it's right on the nose. Look, it hit right on the nose. We're in oversold, overbought, overbought, oversold, overbought. And I didn't even need the indicator on there to find these levels. I just put these levels in because I can see how far away from the Kijinsen we are right here. Okay, so if you take the Ichimoku system off of your chart, now it will be hard to really find these levels. I mean, you can see levels where price is moving up, but you can't tell if that's oversold or overbought, as people say, or excess supply or excess demand, because you just see a move up. So you don't know when it's oversold or overbought. You don't know when it is here. So not having that Ichimoku system on there, I can't see with the market equilibrium. All right, so if we put it back on, we can see that. So it does. I can show you these levels all day long and show you how it does against these other indicators. That's why you don't need these on your chart. So I'm removing it there. And let's go to one more pair to show this. I'll do it right now without the indicator on there, and we can all see this level. We know this is excess. This level here is excess supply or overbought. We're getting away from it there. So let's just look at these three levels, and I'm guaranteeing you that they're going to hit right on the nose with any of these indicators I throw up here. So we'll start out with RSI first, and boom, boom, boom. Oversold, overbought, overbought. Right on the nose. And it tells you, Ichimoku's telling you that, so you don't need the indicator to show you that. So let's pull another one. MACD, everyone's favorite, so let's pull that up. MACD is not quite there yet. It moves here, here, then we reach in there. But the market stayed in this level for a while. It stayed that distance from the Kijinsen, so that level is valid there. You can see MACD down here, and then MACD up here. Same thing. So let me put my level back where I had it, not where MACD thinks it is, where I see it happening. Boom. All right, MACD, you're wrong. So let's remove you from the chart. And let's go to stochastics. Last one. We'll look at this. Boom. Right on the nose here with the overbought level. Right on the nose here with the oversold level. Right on the nose with the overbought level. So I see these things already without needing to add any more things to my chart to make it more confusing or more difficult for me to trade. So that's all I really wanted to show you guys. I mean, this is something you can think about when you want to add indicators to the Ichimoku system, or if you're not even using the Ichimoku system yet. This is a way for you to eliminate some of these indicators that you have on your chart. And I can even trade basically. Once you get good with the Ichimoku system, you know where the crossovers are, and you don't need to leave it on your chart. So what I usually do, I'll change the indicator by taking this Tenkan-sen off, because I know where these levels are from trading it for quite a while. And I'll take this Chiku span off, and I already know where Chiku span is because it's 26 periods behind price, so I know where it is. I know it's above price right here, so I don't need to see that on my chart to make things more confusing. I'll keep this I'll keep the Kijinsen on there because that's going to always show me my, basically, number one, it's a support and resistance level. It's going to always show me my excess supply or demand levels, if the market's in equilibrium or not. And then finally, I definitely keep the cloud in because that gives me the market bias and a lot of support and resistance levels. All right, so I don't need these indicators on the charts. I remove those out of there, and I just need that Ichimoku to teach me and show me where everything is. And I can even make that less confusing by taking uh, some of the components off of the chart, because you get so used to knowing and seeing where they are. And if you're not sure about a crossover, just throw it back on there to look at it real quick and then remove it. That way you eliminate some things on your chart where you don't have to have the clutter and you can see this. All right, so that's how I trade. I'm putting it out there for you guys to give it a shot and see what you think. So basically that's going to be it, guys. Come and join the forum, and you'll get a lot of this stuff because we're putting a lot of things in there right now. So hope to see you in there. All right, so that's it for today, and have a great weekend, guys, and God bless you. So long.